I'm Corbett Wall with DB Auction, here with your feeder flash for Tuesday, November the 26th, where it looks like we had a recoil on the board there. There was a sell-off on Friday, and apparently somebody was betting on a pretty bearish cattle on feed report, as the expectations on that placement figure were very wide. And they thought maybe it was going to come in on the hard side of the market, and so it started to go down a little bit, and then your algorithms took over and just started rolling it down and lost a lot of ground, especially on the feeder board on Friday. Well, gained all that back pretty much. Maybe not completely, but the gains were widespread and just about as strong on Monday, with everything bouncing right back and then gaining quite a bit on your fat cattle board too. So if things don't change a lot here, and we're starting to wind down here for the Thanksgiving holiday, should be able to get another buck or two if we trade any fat cattle this week. Of course, your plants have been saying that they've been full for Thanksgiving week and the week after for weeks on end already, but I'll bet you $1 that they're going to need some cattle, and I bet they come in on Wednesday and start buying them, and I bet they have to give another buck or two for them. Talking about fat cattle trade, the USDA Ag Marketing Service has talked about maybe changing the way that they report negotiated fat cattle sales. Now we have, of course, mandatory price reporting, which reports all that information now, and the packers have to turn all their purchase information in twice a day since the last time that they reported. Basically everything that they buy, they have to turn in. So our voluntary reporting has gotten very weak. In fact, on the voluntary report that reports fat cattle sales, sometimes we'll go all week and there's not even anything on it. But on your mandatory price reporting, we do get all the sales in. Sometimes they might hide what they give for cattle with premiums and discounts if they go on some type of a formula trade. But if it's a straight up negotiated sale, we do get that information, although it continues to become less and less and less. And it hasn't been very many years ago that we would report 500,000 negotiated fat cattle sales in your 5-area feeding region each week. And now we're down where we rarely get over 100,000 for the whole 5-area feeding region for each week. But it's always been the 5-area feeding region. It's been Texas and Kansas and Colorado and Nebraska and Iowa. And that was your 5 areas, and that information goes way back. Well, now they're introducing an idea of maybe changing the way that we do that, basically to help report some outside sales that fall outside of the 5-area feeding region, and which might cause the ability to report more information, because there's some significant sales that happened in Illinois, South Dakota, over in Wyoming, and some places like that that fall outside the 5-area feeding region. Probably the main reason that they're wanting to change this is because Colorado doesn't print anymore, because they have confidentiality rules. There has to be several players, especially on the feedlot side, and then multiple players in the packer side, so that it doesn't just divulge the information of what one entity did. And the computer does all that, the way that information comes in, and we rarely get to see any information being reported from Colorado because of the confidentiality rules. So they think if we start bringing in some more sales around the fringes, around the outside, that it might help more of that information come through and print. And then they also want to come in and kind of gerrymander the lines around and retrace the areas and get rid of your 5-area feeding region and then make it into a 3-area. Well, you can decide what you like about that. I don't like it, and I'm just going to tell you why. One reason I don't like it, and you guys know that I worked with market news with AMS for many, many years. If we reported a sale barn and we were reporting that market and had been reporting that market for several years, the historical information was just as important as the new information we were getting each week. And we, even if we had a sale barn we'd been reporting for many years, just because their receipts started falling off, we wouldn't just abandon that sale and go to the new trended sale. Because of that historical data, we could go back and we could see the market change over time. We could see receipts change over time. And it was very valuable to have that historical data from a market that we'd been in for so long. And I think the same thing goes with this negotiated trade. All that data that we've got that goes back many, many years on your 5-area feeding region, which shows us what our trends are, shows us that our trade is evaporating and going away. It shows us kind of where the cattle are selling at a premium and what it is and what times of the year. All that stuff is very, very important. Well, when you quit reporting a product in a certain way and you start doing it another way, well then all that other information is not any good anymore. So you have to start building a new base up again. So I hate to lose all that information the way we've been gathering it before. And also when they put the 3-area together, they're basically going to lump the entire southern plains together, going to lump Texas and Kansas together. And I don't like the idea of that. I like Texas being on its own. The negotiated trade in Texas is light enough already. But your packers do want to keep that as an area, and so they're going to keep buying negotiated cattle in Texas to keep it as an area, to give a weighted average within Texas so they can use that price to buy formula cattle and things like that. When you sweep it into Kansas, well, that's just going to continue to evaporate the negotiated trade in the southern plains. I don't like it. I like being able to see how much volume we have within each of those 5 areas. I think it's very important if we want to keep this negotiated trade. If we're just going to give up on the negotiated trade, like a lot of people think we probably might as well because it's getting so light and so scant that it doesn't really amount to anything. If we're just going to give up on it, I guess we can go ahead and do that. But I don't really understand what good it does to pick up that little dab of trade on the outside of the 5 area. It's been there all along. We've known that it was there all along. What's the big deal in getting it into your 5 area weighted average? But you guys, you're going to hear more and more about that as we go forward, and I just kind of wanted to get you guys to thinking about that, and you can make your own conclusions. Our fake meat's been active out there, and not the Impossible, but the Beyond Meat signed a big contract with the NBA, and the NBA, they're totally about USA. They're kind of more liking themselves to China than they have the USA. They're all about the Chinese, and they think everything that they do over there, the way that they keep their people down and the way that they use socialism and keep their people in a bubble over there, they won't even talk bad about that. They think that's pretty much the way you ought to go. Now they've decided that they want to partner with Beyond Meat because that's the way they want to go there too. Now you're going to tell me those people that are playing for them got to be 7 foot tall by eating fake meat? I don't think so. Let's look at the board for Monday. December live cattle futures up $1.02 at 119.70. February's up $1.30 at 125.15. All your traded months on live cattle were up over $1. January feeder cattle up $2.70 up to 140.197. March up $2.75 at 142.35. All your traded months of feeder cattle were up over $2.50. Even though a lot of them lost more than $3 on Friday, that was pretty significant and pretty impressive turnaround there. Your weighted average on last week's negotiated fat cattle, and we still got the 5 area feeding region, and we can compare it to what we've done over the last several years and last week, and it's really handy that way whenever you have that information. Weighted average on a total volume of negotiated sales in the 5 area feeding region of just 87,300 head. That compares to just 74,000 head last week and 119,300 head the same week a year ago. If we changed that all up, we wouldn't know what it was. As I told you on the last visit, your Southern Plains was $1 higher at 116. Northern Plains was about steady from 115 to 116 live, $2 higher dressed at 184. Your Western Nebraska, Colorado region was $1 higher at 117. You don't have to worry about whether or not that Colorado report prints or not because of confidentiality rules. I'll give you the information right here. How about your live sales of steers and heifers? They ranged from 114 to 118. They were mostly 115 to 117. Weighted average was 115.96 on steers live, and that was up 77 cents compared to the previous week. Your dressed steers and heifers ranged in price from 177 to 185, mostly all at 184. Your weighted average on dressed steers was 183.59, but the heifer weighted average was much closer to 184. But that steer weighted average price was $1.87 higher than the previous week, and that's where your $2 higher comes in on a dressed. Nationwide negotiated sales, 106,200 head. So there was a lot of trade around the fringe that I was talking about that we're not picking up in your 5 area, but we're picking them up on the nationwide. So what's the big deal? 106,200 head negotiated in the nation, and 27,600 of those, or about 26% of them, were for the 15 to 30 day delivery. Thought it might be a lot more than that with Thanksgiving falling in there, and so if I guess they're not too nervous if they don't get any negotiated trade this week with Thanksgiving coming up, but because they didn't get a whole lot of cattle secured for delivery in the next 2 to 4 weeks. But let's look about your feeder cattle market. Real-time index 143.19, down 46 cents from the end of last week. So a lot of volume again on your Monday sales there, and it did pull it back a little bit. Oklahoma National Stockyards in Oklahoma City, they blew their wad last week because of the holiday and just, we've gotten rid of a lot of cattle here. 5,700 head there in Oklahoma City. Feeder steers steady to $1 higher. Feeder heifers $1 to $3 higher. Steer calves $1 to $3 higher, and heifer calves $6 to $7 higher. And most all of those higher markets basically due to a lighter supply. Everything balances out with supply and demand, and much lighter offering this week helped the market gain quite a bit of ground. Now, I tell you where they did have a big sale was Joplin Regional Stockyards. I told you guys about this on our early week visit there. 12,000 head or thereabouts, and unbelievable how many cattle they can pack into that sale. But about 8,000 head of yearling cattle. Now the calves were $2 to $5 lower, but it wasn't all about the calves. It was all about the yearlings. I was talking to Rick Huffman there, my old buddy that reports the market there for the Missouri Department of Agriculture, and he said that the calf deal, they started out at 5:30 in the morning, just like I told you. Started out at 5:30 in the morning, and then they sold the commingled cattle there about 8:30, and then as soon as they were done with the commingled cattle, they got right on the yearlings, and he said they sold pot loads and bigger drafts of yearlings all day long. And they brought an auctioneer in out of retirement by the name of Jack Moore. Normally they got Bailey and Skylar doing that on a weekly basis, especially on a Monday, but Skylar had a new baby boy last week and he's still rocking it. Bailey come in there and started off the sale, and then Jack got up there, and that makes your consigners pretty happy because they like to see Jackie up there in the block. But your yearling steers, unevenly steady, but hanging right in there with that kind of volume is pretty darn good. Yearling heifers steady to $3 higher. Look at this individual quote from Joplin Regional Stockyards. We're hinging right there. We're always looking for a big price on a benchmark weight of cattle. Right now, it's whether or not you can get $150 for an 800-pound steer. They can do it in Joplin. 136 head of them weighed 828 at 151.10. You can't get any more for that for them. A lot of places in the northern plains and in the upper Midwest, they just won't hardly bring it. But that is a big price on a good tested weight of steers right there. Russell, Iowa, Russell Livestock had a good test on the calves there, had a good sale. 125 head of full-weight steers there. This string of them averaged 458 pounds at 176.75. But the big price that we saw on Monday come from Central Missouri, Callaway Livestock Center, Kingdom City, Missouri. Look at this quote. 64 head of 805-pound steers, 155.50. That's your feeder flash for Tuesday.